Guy is a classic example of a business owner that we love to help. In my industry, in the research and development tax credits, companies that do it, almost exclusively, the money goes to large companies, the R&D money. Because the bigger companies, BDO, Alliant, Deloitte, etc., can't be bothered with Ballard and Ballard Jewelers. And so there's this gigantic void of businesses across America. According to Wall Street Journal, roughly 95% of the businesses in America that qualify for R&D never take it. It's huge money. The Ballards would have qualified years ago when I first got into this business, except for the fact they were a C Corp. And they're like most smaller C Corps, the goal is to zero out taxes paid within the corporation. And then you bonus out your profits in the end, and you take salaries, and the taxes are paid by the owners of the C Corp, but not by the C Corp itself. So the problem for that, for someone like me, is I can't get them money back if they're not paying taxes. So it's a non-starter for a smaller business that has a C Corp. Once they went to an S Corp, that's a pass-through entity, and the taxes are paid by the owners of the company. The credits are earned by the corporation. And here's the thing, you would think, well, how in the heck does a jeweler qualify for R&D? You know, a guy told us not too long ago, or maybe it was just in conversation, literally over half his business is by design. Custom design. Therein lies R&D. They take risks, they have to design it, they have to hope the client likes it, they have to use high-level skills and equipment that they purchase over time. And so, do they 100% qualify for R&D? No. They qualify for a percentage, but they most certainly qualify. And it was measured against taxes paid. So if somebody's going to get back, let's say over a 3-year period, because we get to go back 3 years. If somebody's going to get back, let's say $60,000, which is our average small case, is $60,000, which is $20,000 a year for 3 years, state and fed. Okay, so you would think, well, $60,000 sounds like a lot of money. That's going to really poke the bear. No, not really. We're talking about maybe $12,000 for one fed, $8,000 for a state, but we're talking like 6, 7 checks, okay, because it's over 3 years, state and fed. So, what does and it comes back to you tax-free, and they pay interest. Now, the interest you get is taxable later, because you got to put it back onto your taxes.
Nice.
But at least you get the interest.
But
Free money.
But it's free money. So how much would the Ballards have to make, sell, to net, after taxes, 60 grand? So that's what we do for our clients. We got involved with this about 5.5 years ago. Since then, we have over 2,000 clients. We've helped get back over $125 million. And over 2,000 clients, we have about 20 that have gone to exam, audit, or review. That's not even a higher percentage of random audits. So the biggest 2 concerns we have when we're dealing with companies is, why hasn't their CPA done it for them already, A, and B, they're afraid to poke the bear. I'm going to get audited. So anyways, that's my R&D. I can't help everybody. And even companies that classically qualify, I still might not be able to help, because they may be a C Corp. and they zeroed out their C Corp, or maybe they have other offsetting write-offs, so they didn't really need me, etc. All kinds of variables. But again, we've helped over 2,000 companies in 5.5 years, so there's a lot of companies we can help. Medical profession, great for us. Instruction profession, great for us. Computer science, great for us. And you can go on and on and on. Anybody who is creatively developing, growing, evolving on any level. Doesn't even have to be new to the marketplace. It could just be new for them. Those are R&D activities. So, and those things we can quickly explore freely with the business owner. Switching gears, we ran into a company several months ago that does the Section 125 that I told you guys about. And they want to refer all their R&D business to us because they're dealing with the same kind of business owners. But in their case, the advantage is it doesn't matter what you do, and everybody qualifies. They just don't want to deal with a company less than 25 employees, which I totally understand. It's a lot of work. And so in that particular scenario, everybody has employees at 25 and above, let's just say, and most of them have benefits. If you have 50 or more, you're forced to have a certain amount of benefits for your employees by law. And this Section 125, also commonly called a cafeteria plan, extremely common in the industry as a tax law to write off employee benefits. So you can pre-tax employee benefits. The employer saves in payroll taxes. The employee gets to buy benefits pre-taxable. This particular 125 plan takes that and turns it on its ear, funnels $1,200 in and out through the 125 plan, creating a guaranteed savings of roughly $2,000 a year per employee. So if you have 100 employees, your minimum guaranteed savings collectively between the employer and the employee is $200,000. Guaranteed. It's absolutely locked. So, and then the savings could be much more than that. And if they provide health insurance, or if it's a self-insured company or very large, like an Amazon, then they can save them quite a lot. Like Amazon, who is their client, and Harley Davidson, and Domino's Pizza, and ADP, I could go on and on of who's who of companies you would well recognize, as I showed you in a slide not too long ago, of companies they have helped because the employee gets better benefits, zero co-pays on most of their benefits. The employer saves in payroll taxes, the employee nets roughly $1,500 a year more in net pay. All of those things happen automatically, and the employee has an interactive program that they have to interact with online for about 5 to 7 minutes a month, and that creates all of this. The employee can self-design it too: lose weight, quit smoking, diabetes control, etc., etc., etc. So this is a no-brainer, I'm telling you. If you know any business with 25 or more employees, just refer them to me. And we pay a referral fee of $1 per employee, month in and month out, year in and year out. We've now referred over, in the first couple of months, over 15,000 lives. So, and the sales are just now starting to happen. It's a few month lag on sales process. And just got a text this morning, our first one went in.
Ooh.
Yeah. So this reminds me of 5.5 years ago when we got our first R&D.
Yeah.
It was a dental office, and we got them back $31,000 net, and I'll leave you with this story. It was the dental office of my business partners, and they had just put in another chair and some new equipment out of money they didn't really have. And they were Christians that were friends with my partner. Not necessarily, they weren't going to the same church, but anyways, when he told her how much they were going to net, she started bawling. And he goes, "Did I do something wrong?" Yeah. And she said, we had thought we had overextended ourselves, and I was praying that we needed $31,000 to pay for this, and I didn't know how we were going to do that.
That's a big one.
That was our first client. Since then, we've done over 120 million. So, yeah. So this is the next thing for us, and it could be a really good thing for you. You have a client of 1,000 employees. If you just happen to know somebody with a lot of employees, that could be $1,000 a month to you, and you don't have to do anything. Month in and month out, and they don't leave because there's no reason to. The tax savings are what they are. So, with that, any questions?
Do you deal with any companies, countrywide, worldwide?
The 125 is 50 states,
Okay.
so it's in-house, USA. R&D it has to be a US-based company, but they can be doing worldwide business. Yeah.
Do you say they have to be a C Corp?
No, on the 125, it doesn't matter what they are. On the R&D, it's best that they're an S Corp or an LLC. We can still help C Corps, they just have to be much larger. Yeah.
Nice.
All right, very good. Thank you.